let's go there, because it is really amazing to hear people talk about, history rhyming, but not even pay attention to facts. 70s was such a very different period in just about every way. Demographically, we had a very young population in the United States coming into their peak spending years. You think about when you're growing up, right? 25 to 45, you're really not very productive the way productivity is measured. You're learning how to do your job, your function. You don't really have a lot of responsibility. You don't have a lot of income. You haven't started your family yet in many cases, so you don't spend as much. It's not until you reach that 45 to 65 period where peak demographics kick in. You have massive spending. 46.5 is the maximum spending in your life. It's where you got the cars and the kids and the vacations and all the money's going out the door in college. And the other thing you have is a supply-demand imbalance that can trigger inflation. And that's what happened in the 70s. We had a supply disruption in oil, prices went up, and you started to see some inflation. And then you had the problem that Volcker gets credit for, but when you actually, again, look at the data, you're kind of like, wait a second, this is not a good thing. So the way they measured CPI included mortgage prices, interest rates, and house prices. So as house prices started to go up, as more boomers, my cohort, started to buy houses, then interest rates started to rise. So he decided, I'm going to raise interest rates. Well, but it fed into the CPI. So every time he raised rates, the CPI went up, which meant he thought he had to raise more. And it was this cascading effect until, quote unquote, he broke the back of inflation when rates were 20%. And all he did is plunge us into a back-to-back recession in 81 and 83. And people are like, well, that's a good thing somehow. So that's the first thing that isn't the same. Second is demographically today, we don't have demand pull inflation.
Right.
The aging population is downsizing, spending less. The echo boomers are not old enough to be in peak spending yet. So we have massive attrition from workforce population, no workforce population growth. There's no demand pull inflation. What we have is currency devaluation. Mm-hmm. The Fed printed 50% of all the money that's existed in the history of our republic. Think about this, 256 years, half of the money in the past 24 months.
Insanity.
That's what we're seeing. Like, I live in Chapel Hill, North Carolina. Housing prices went up 40% in the last 12 months. Did my house grow? Did it get more efficient? No, it actually wore out. Actually, I had to put money into it to keep its value. What happened is the currency we value it in, the dollar, went down a lot. It was, no, the dollar's strong. Right. No, it's not. You're looking at DXY. DXY compares the US dollar to the yen and the euro and a couple other things. And the fact that the yen and the euro are even more toilet paper than the dollar doesn't make the dollar strong. The dollar versus the renminbi over the last 2 years is flat to down a little bit. The renminbi is the ascendant currency. The dollar is in decline. It's been the world reserve currency for 70 plus years, but that's rapidly coming to an end. So anyway, more than you wanted for that answer. But it is really interesting how people think, we're in the 1970s because oil prices rose. No, oil prices rose because of ridiculous policies by governments to lock people in their homes in response to the flu. That's why half of it was oil prices. Oil prices went from $40, during the lockdown, they troughed around $40. In fact, they went negative for a couple weeks, but that's because Saudi flooded the market right into the teeth of the downturn. Maybe they actually even had knowledge that it was coming. And they flooded the market. They bought up all the storage in Houston and created this negative price of oil in April of 2020. And then from $40, oil goes to $100 and quote unquote, that's inflation. Well, no, it was $100 before the lockdowns and it's $100 after the lockdowns. That's not inflation, but it counts as CPI inflation. The other part of it was used car prices. Used car prices went crazy because automakers couldn't get chips to make new cars. Well, why couldn't they get chips? Because again, the world did this stupid, idiotic, maybe one of the dumbest policy decisions in the history of mankind, which is a big statement, I know. And I'm prone to hyperbole, but this might go down as when you destroy economies over a respiratory virus that we've been living with for thousands of years, makes no sense. But maybe it does make sense if your goal is different than defeating the virus. Maybe it's not about the virus. Maybe it's about control. Maybe it's about money. Maybe it's about power. Maybe it's about dictatorships. More on that later. So what happened is most of the CPI increase that is in the past, right? It's already happened. Okay. Oil has now gone from 120 back to 100, and used car prices have fallen 30%. So we're on the backside of the CPI increase. But that's not inflation. How many interest rate hikes are going to solve the chip shortage? How many interest rate hikes are going to open up Chinese ports because of their idiotic zero COVID policy? So we can get containers in there to fill up and come back to fix supply chains. How many interest rate hikes are going to change the price of natural gas going into Europe from Russia? No amount of interest rate hikes can do any of those things. Look at European inflation. All of it, all of the European inflation is gas prices. All of it. And gas prices are because Russia has, we give you most of your gas. You want to sanction us. You want to seize our assets out of thin air. Oh, guess what? We'll just charge you more for gas. Or, even better, we'll threaten to cut off the gas. And then what happens to price? So the Fed can't control any of that. And so the Fed, I believe, is simply trying to reload the gun, meaning put some interest rate hikes on, so that when they acknowledge that we're in a recession. We're in a recession right now, right? First quarter was negative, second quarter's negative. We're in a recession. And if they turn it into the Great Depression by over tightening, because that's how the Great Recession turned into the Great Depression back in the 20s, in the 30s, is by taking liquidity out of the system. Economies need liquidity. And when you take liquidity out, bad things happen. So I think the Fed's making a big policy mistake. We'll see how it plays out. But I think they will start cutting before people expect, sometime probably in the fall. The Treasury in the United States and other places, US, Europe and Japan, has this problem. Massive amounts of debt. Massive amounts of debt. They can't pay it back. Right? If you taxed all the wealth in the United States, you couldn't pay back the debt. You can't restructure it because no one would take the other side. Well, in fact, the Japanese and the Chinese are selling US Treasuries. You can't default on it because, then if you're a politician, you lose your job. So what do? You devalue it. So what do you do? You print more money to devalue the debt. But the real problem is all of that debt is causing this incessant desire to keep interest rates really low because the only buyers of debt have been the banks and the central banks. And so here's what they do. The banks borrow from the central banks at 0, and then they buy treasuries at 2-3%, and they lock those in. They lever them up 11 or 12 times and have a riskless trade. Think about that. JP Morgan had 0 negative trading days last year. How is that possible? Who could be that perfect at trading? Well, they're not trading. They're arbitraging. They're borrowing at 0 and buying treasuries. Riskless trade. So that was refortifying the balance sheets of the banks that had been destroyed in the global financial crisis. So they kept that on too long because it was really good. The Fed was happy, the banks were happy, the executives were happy, the management teams were happy. And then they passed crazy tax legislation to basically say, you large companies, we'll cut your taxes if you do this. How about you buy back your own stock and increase the price of the stock, even though your earnings are flat? And then the people at the top get really rich. So what's happened over the last, really since 1913, and really exacerbated since the global financial crisis, is there's been this giant sucking sound. And that's not jobs going to Mexico. That is the money being sucked up from the middle class and the masses to the very tippy top. Not even the 1%, the 0.1%. And that is the job of the Fed. Everyone thinks the Fed is price stability and job. No. The job of the Fed is to steal money from the masses and give it to the people at the top through this thing we call inflation. Inflation is a hoax. There's no reason that prices should go up. From 1776, when we formed the Republic, to 1913, the price of a dollar was a dollar. Now, why do we even call it a dollar? Oh, well, because we borrowed the idea from the Netherlands, from the Rothschild family. The Rothschilds run everything in the world, and they called it the dollar in the Bank of the Dutch National Bank. So we took the dollar, called it the dollar, and from 1776 to 1913, the dollar was worth a dollar. There was no inflation because we didn't have a central bank to create money out of thin air. Since 1913, as Jay Leno quipped, I heard they were going to make a dollar coin. Well, they already have one. It's called a nickel. So we turned a dollar into 5 cents over the last 100 plus years. And so this constant theft, and inflation is theft, as is taxation, this constant theft of wealth from the average person to the elites is the plan. They're missing the primary objective, which is the average person's quality of life is going down.
Absolutely.
Right? We have the widest income and wealth inequality in the history of mankind. Right? It's never been worse. Now people say, but we've taken all these people out of poverty. True. We took them out of abject poverty and we put them in a class where they have to be solely dependent on the government through handouts. Right? What did they just do in Canada? They just sent people money. Why did they send them money? Well, so they would vote for the people that, if you asked them, they'd say, well, I hate these guys. Well, then why do you vote for them? Well, because I want to get my free money. And that has been the dictator playbook since the beginning of time.